The bear market rally and the Bitcoin bounce are running out of steam. So let's take a look at what is going on today in the markets and with crypto. And before we do, I just want to put a little warning out there to everybody watching. In fact, let me just kind of talk one-on-one with you here. So there's a lot going on in the crypto space. Obviously with FTX, we saw what happened with Circle, 3AC, Luna, all these different things. There's a lot of contagion out there. There's a lot of things that we probably don't know. They're going to potentially, be uncovered here soon in the fallout and reverberating effects of what happened with FTX. So bottom line is you need to operate, if you're investing in crypto, Bitcoin, crypto, anything like that, right now in this environment, you need to operate from the standpoint of whatever you invest, you're going to lose. So you just need to have that mindset because it could happen. Any exchange could shut down, could go bankrupt. Any cryptocurrency could get hacked. Bitcoin is the most safe, but it's not completely immune to attacks, especially as the price drops and gets lower. 51% attack becomes more realistic and possible as the miners shut down machines and reduce the hash rate and computing power of the network. It leaves some vulnerabilities there. I'm not saying anything like that's going to happen. I'm not calling for that, predicting. I'm just saying you have to look at probabilities, possibilities, likelihoods. And right now, you need to verify everything. You really can't trust any exchange right now. You can't trust any stable coins. Don't keep your money in stable coins. Don't keep it on exchanges. Don't keep your crypto on exchanges, things like that. You need to use your own wallets. You need to use your own currency and cash out and keep your money wherever you keep your money. And you just need to, if you're going to take those risks, just operate from the assumption that you're going to lose whatever you have on exchanges, things like that. That's just the environment we're in right now with these risks. We don't know what's lurking under the surface. Probably none of that will happen, hopefully. And I know there's a lot of people that have been hurt by this right now, but that's just the mindset you need to have. And if you can't do that, then just stay on the sidelines, be in cash, stay on the sidelines, wait it out. The scams are going to get washed out. All the bad actors are going to get exposed. The environment from a regulatory standpoint will get more clear, more stringent, more restricted, but it's not going to eliminate fraud and insolvencies from happening just like they do in the traditional market. So anyways, I just wanted to put that little warning out there for everybody. Just be careful. Don't trust and verify. So just be careful. So anyways, markets ended up down today about 0.63 on the Dow, 0.89 in the S&P, 1% on the NASDAQ. Bitcoin is down as well. We'll take a look at that in a minute. And obviously the big thing is it's been a bear market rally, short covering, things like that lately. But Federal Reserve members are coming out and they are speaking their piece after this big market rally. The Fed does not want to see that. That is easing of financial conditions with the dollar down, bond yields down, and the market up. The Fed is not looking for that kind of a reaction and response right now. They're trying to keep financial conditions tight. And but they said that Brainerd said that she thinks it will be probably be appropriate soon to move to a lower pace of rate increases. She said that I think what's really important to emphasize is we've done a lot, but we have additional work to do both on raising rates and sustaining restraint to bring inflation down to 2% over time. And she also said we have raised rates very rapidly and we've been reducing the balance sheet. And you can see that financial conditions, you can see that in inflation expectations, which are quite well anchored. So the Fed is not backing off their inflation fight, and tighter financial conditions and higher for longer as we continue to navigate this climate and environment that we're in right now. As you can see, the market's kind of topped out on this recent rally, kind of reminiscent of what happened back here in August. And what is the indications of that? We've been talking about it the last couple of days is the VIX, right? So if you take a look at the VIX, here was the VIX right here. Back in that August timeframe, right around 19. Didn't quite get that low yet, but it did in September. And if we go back and look at what happened in the market in September, that was right here at this point where the VIX kind of reversed. So right now, that's what we're seeing. The dollar tried to put in a little bit of a bounce today. Maybe it's found support here. And then the 10-year put in a little bit of a bounce there. Also maybe finding support as risk on becomes risk off. So when the dollar's down, 10-year treasuries are down, then it's risk on. When that reverses, risk off. When the VIX is high, It's time to buy. When the VIX is low, look out below. So this is risk off, this is risk on. So that's kind of what the market liquidity looks like right now. Let's go ahead and take a look at Bitcoin, see what's going on here. Bitcoin, a lot of people are looking for that double bottom here and a rebound out of this. But again, what's most likely and probabilistic right now is more downside because we're in a bear market. We're in a tightening financial conditions. We still have a battle against inflation, even though it was down a little bit. We won't know if that's a peak or even a pause or a plateau until next reading, which is in December. And then the Fed meets after that to provide further guidance. And the thing to look at now with this is what's next. Well, as you can see, it's on major support right here at this 16,000 level that I've been talking about the last few weeks, that 15 to 16,000, but really there's nothing to stop it until it gets down to like 12 to 13,000 next. So that's kind of a free fall area if it loses. And when it loses this support level here, that's the next main level to catch it and hold it up is at that. Well, it's really about $11,000, right? So that's going to be that $10,000, $11,000 area. And there's, the narrative out there is that, hey, if everybody's calling for $10,000, it's not going to happen. Well, that it doesn't work that way. That's not always true because a lot of people are out of the system, out of the market. The big players are not, they're not coming in right now with what's going on until there's regulatory guidance and clarity. It's just not going to happen. And none of the indicators matter. Moving averages don't matter. Trend lines really don't matter. At the end of the day, it's a systemic risk, failure in the system right now with FTX and all these other things and the contagion throughout the system that needs to get resolved and washed out. And then for major institutional investors, clarity, regulation and clarity is what they need, certainty. And most of them are only going to invest primarily in the United States where they have some sort of at least guidance, in terms of like Coinbase, being a public company, a little bit more scrutinized. We don't know anything about Binance. We don't know what their financials look like. All you know is what somebody says. We saw where that got us with FTX. We saw that where that got us with Circle. They all said the same things. We're going to save crypto. We're going to bail everybody out. We've got the assets. We're doing fine. And then bam, they blow up. So you really can't believe anybody right now until they prove it. Binance has not disclosed their financials. They have not proven anything with a reputable auditing firm, nor has Tether. And I think USDC is trying to get their stuff together and they want to go public and be a public company. But I think there's some not so scrupulous stuff going on behind the scenes there as well. I think there's some, a little bit of cloudiness behind that. We obviously know Binance has gotten themselves in trouble all across the world and been kicked out of a lot of countries, banned in a lot of countries, fined in a lot of countries, including the United States. So I wouldn't believe the narrative of Binance as the savior, CZ as the savior of the space. We saw how that went with FTX and Tether. So Binance blew up. If Tether blows up, I mean that's lights out for the value, not for the industry, not for the space, but for the value of the asset. So that's something that could drive you down to these lower 3,000-4,000 levels, like we saw the last two times in the last 4 years. And a lot of people never thought we'd get here. A lot of people said that, these levels would never be reached again, things like that. And so that's the one thing that you can say is that you can never say never in crypto or in markets. Markets can go a lot higher for a lot longer than you think. They can go a lot lower than a lot longer for a lot longer than you think. And, even as much as I do and pay attention to and watch, I can't catch perfect bottoms and tops. I bought Facebook in the hundreds. At 100, 95 to 100, I averaged in when it was dropping, thinking it was going to bottom out around here, went a little lower, didn't think it would go that low, but it did. And then I sold out right around 104, 105, didn't think it would go as high, and it went higher. I made a profit, but I didn't catch the perfect bottom, didn't catch the perfect top, and that was great. The big one was AMC. I was looking at AMC at $5, and I was like, man, that seems really good, and a little bounce. I didn't do it. And sure enough, it went to $8.33. So that would have been a good one. I missed out. So that's okay. Sometimes, that's going to happen. You have to be okay with missing out. You don't want to let FOMO set in. You don't want to let that take over and affect your judgment. And we can see this is already reversing and it'll likely go back down here and put in a new low, just kind of like it's done all the way down. So that's kind of what I was thinking about, was catching a bounce like this. And man, that was a nice little pop there. So there'll be another day for AMC. There'll be another day for Meta. So again, I made a profit and no problem missing out on absolute bottoms, absolute tops. As long as you get a piece of it and you're in profit, you're good to go. So you don't want to be greedy, but right now Bitcoin is at a critical level. The other thing too is this is not organic retail buying. This price action is exactly the same across most of these assets. So that tells you this is just programmed. This is just programmed in. It's programmed trades, algorithmic, trying to liquidate people and eat people up all the way down. This has all been programmed in all the way down, getting people getting really bullish, shaking them out, market makers. And the thing is that, everything's telegraphed. If you're going long and short and you're putting stop losses in and things like that, your orders are on the books. The market maker knows. So if you put your stops in here, they'll drive, price down, liquidate all your stops. And they know that there's buy orders up here. So then they'll drive it up there and liquidate all those and sell all the orders and just kind of do this over and over and over. So what's happened is all the retail is getting shaken out here. And when that runs out of steam, this is going to ultimately fall to that next level that we're looking at right here of support, which is in that, $11,000 range where you've got, a good little bit of support here for price that would be difficult for it to get through. It would take a major, more contagion meltdowns and risks to make that happen. So those are the things to look at. And again, just don't trust anything or anybody right now. Make sure you verify everything and operate from the assumption you're going to lose every penny that you're putting at risk in the markets, stocks and crypto, because the markets are moving fast. You never know what's lurking behind the curtain. You don't know what's going on. The charts aren't going to tell you every move in advance. And anything can happen. If the war escalates in Ukraine, if it resolves, markets are going to move on that news big time before it's in the charts. The charts track behavior and patterns. They track human behavior and they track patterns of price action, but it's all lagging. So you want to pay attention to the news and what's going on now right now and understand your risk. So that's what I'm looking at. I'll see you in the next video.